Goldman Sachs explains how to identify Bitcoin and other crypto asset fundamentals. It is not as straightforward to value a cryptocurrency as it is to value a stock. A stock is a portion of a corporation, and you may evaluate its worth by looking at what the firm owns as well as its revenue, costs, profits, and trends. It's even more hazy in the case of cryptocurrency because coin values aren't typically linked to revenues, earnings, or any of the other elements that go into valuations. It's all about public opinion, often known as the network effect. In a research note published this week by Goldman Sachs economics research team, writers Zach Pandel and Isabella Rosenberg investigated the use of specific characteristics of digital assets to establish analogues to stock fundamentals. Previously, the authors said, comparing it to precious metals such as gold, a store of value, was a typical framework for viewing assets such as Bitcoin. The main distinction is that gold does not have user networks. However, social media does. The authors said, cryptocurrency pricing may also be tied to the value of their underlying distributed networks, in the same way that equity valuations of social media firms like Facebook are related to the value of their proprietary networks. As a result, we compare cryptocurrency prices to various proxies for network scale, similar to how social media valuations are linked to network measures like monthly active users, MAUs. An approach to consider the basics of cryptocurrency. The Goldman experts compared the number of users on a network, say, Bitcoin or Dogecoin, to the currency's market capitalization, how many coins are in circulation multiplied by the coin's worth. They examined Bitcoin, Bitcoin Cash, Dash, Ethereum, Ethereum Classic, Litecoin, XRP Ripple, and Zcash. In cross-sectional data, we detect a robust association between market capitalization and network size, the experts stated. The question is how significant the correlation is. The network effect is frequently observed in a relationship where the value grows by the square of the number of nodes or participants. For example, 10 nodes would result in a value of 100, while 9 nodes would result in an 81. According to this idea, the value is proportional to the number of connections. However, there is already a genuine value linked to cryptocurrency assets, the market cap, so the Goldman analysts examined the relationship between the number of participants and the market cap to see how it corresponded with the clear correlation they discovered across those 8 crypto assets. Cryptocurrency market capitalizations have historically been favorably connected with network size, rising more than 1-for-1 with network growth, the analysts stated. They derived the average growth curve from historical data as value equals users to the 1.4 power. This provides a benchmark ratio for what fundamentals should be, comparable to utilizing a historical P/E ratio as a standard to determine how much a company should be priced at. Bitcoin's market capitalization dwarfs its fundamentals. For Bitcoin, there is a significant difference between the value it should have, its fundamentals, based on the amount of user growth, and the value it really has in the form of market capitalization. According to the analysts, the value of Bitcoin has risen 520% from its 2018 average during the last 3 years, while its network has only grown by 60 to 100%, depending on where in 2018 you count from. Based on its user growth, the increase in Bitcoin's value should have been lower, 90 to 150% rather than 520%. Again, the notion is that this figure represents the increase of Bitcoin's fundamentals, which, like stocks, does not necessarily tell the whole picture. The discrepancy between its fundamental value and market capitalization indicates that it is either undervalued today, undervalued in 2018, or a mix of the two. Other factors may be at work, such as Bitcoin being viewed as cool, new, an easy method to get rich quickly, or in some other manner appealing. Some of these characteristics, such as sentiment, further complicate matters. However, How many people utilize a crypto asset is a type of emotion, whether they are joining the network and creating an address or purchasing and trading cryptocurrency. As a result, examining these network fundamentals is merely one tool in a valuation toolkit. Rising prices may stimulate more speculative trading activity, addressing growth as a result. More network activity may not signify an advance in Bitcoin fundamentals. The platforms do not have more economic value through network effects simply because of increased speculative trading, Pandel and Rosenberg stated. In order for cryptocurrency networks to have long-term value, activity must be driven by non-speculative use cases. For the time being, they noted, those use cases are just not available. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.